Thank you, everybody. So we're realigning the agenda just a little bit. We're going to proceed first, now that we're back in open session, with our auditor's report, and we'll continue on the agenda. And then we're going to backtrack and go back to 8, 9, 10 before we finish up. Welcome to auditors.
I just really pleasure to welcome the mayor's team here. It's been had great faith in us last year. We came and said, hey, we'd like to maybe put the contract out for bid. A couple of had faith, confidence that it turned out wonderful. I think you'll see that in their presentation. I also think for you as a board, I truly believe the value you're getting out of audit is a lot better than where we were. So with that, the slide should be up in a moment. No, in front of everyone today. Yeah, we usually say it. I think there's here's the later.
Well, good afternoon. Dwight Baracker. I'm the audit partner for the engagement. Mike Garber, who couldn't be with us today, he's also serves as our government ditch team leader and concurring reviewer of the financial statements and audit work that we do. So every audit we issue has at least 3 sets of eyes that go on it before we issue it along with the client. So we'll get into some introductions. This is Tyler Farnsworth. He served as manager on the engagement for this year's audit. Some other staff. Just to let everyone know what's kind of a boring audit. When you hear the word boring with audits, that's a good thing. You don't hear exciting audits because then you wonder, hey, what's going on? But it was a kind of a slow year for GABI pronouncements, things of that nature. So we'll touch base on some of that. So. Get started. As I stated before, this is our audit team that served VPRA this year. Mike Garber, over 30 years of experience in local government work. He works on a lot of engagements throughout the state of Virginia. Myself, the service partner on the engagement, 20 plus years of experience in primarily focused in the transportation industry. I've worked with entities such as VRE, MVTC, PRTC throughout my career, so understand the importance of transit in the Commonwealth. Tyler Farnsworth, 10 years experience, similar background. I like to say I've trained him, so hopefully he's coming along well. So Hunter Simmons, supervisor in charge on the engagement that was also here this year working audit. In the financial statements that are issued, there's only several pages that belong to PB mayors. There's 2 opinions. There's an opinion on the basic financial statements, which is located on pages 2 and 4 of the report. That opinion is unmodified. It's the highest opinion we can issue as auditors, so it's a clean audit opinion. We always want to hear that unmodified term. The second opinion is on the gas standards that we have to follow. That opinion is also unmodified, and that can be found on pages 64 and 65 of the financial statements. The audit was completed as planned. No significant changes throughout the audit process. It was completed by the required September 30th deadline established by the APA, which that really speaks to the volume of effort that Steve and his staff put into getting things done. So one other report that we do issue as part of the audit, there's an examination report that we have to test VRS compliance related to the pension program that everyone participates in at VPRA. So that report was also issued, and that was a clean report as well. So some financial statement highlights. I'm not going to dive deep into the financials because I think Steve and his staff have a patient later that's going to go deeper into that, but just a few items to highlight. Net position, that increased approximately $210 million. And when you think of that increase, it's kind of like your income for the year, you went up. So we're in the plus positive for the past fiscal year. Unrestricted net position, the amount available to fund BPA operations was $635 million at June 30th. Restricted net position, money that's we are holding. It can only, that's restricted by the use source of fund revenue received was 102 million, and 715 million we have invested in our capital assets. That's our infrastructure, rail infrastructure, equipment, CIP projects, some leased assets and subscription assets that we have reported on the financials. Key audit and accounting issues. With every audit engagement, we have to identify what significant accounting estimates are. The 5 that are listed here are ones that we have to audit in detail with VPRA. Capital assets, that's an estimate. How long is this asset going to last? What's the life of that? Investments, the valuation, we rely on third parties to determine what those investments are valued at. Pension OPEB benefits, that's based on actuarial reports received from DRS of the state. Lease liabilities and right to use leased assets. The only liabilities and leased assets we have reported on the financial statements relate to the office facilities we have here in Richmond and Alexandria, but that's also an estimate. And then subscription liability, right to use subscription asset. This was a GASB pronouncement that was adopted in FY23. And the asset that we have recorded is based on our ERP system, the accounting system that we use. So that's the asset there. Audit adjustments, none. We fairly often come across audits where we don't have any audit adjustments. So again, speaks volumes of Steve and his staff and the work they've done. Some other items we're required to communicate as part of the audit are responsibilities. I'm not going to go down through each of those, but the overall plan, scope, and timing. There was a letter issued at the beginning of the audit. I think everyone should have received a copy of. Accounting policies and practice. Adoption and change in accounting policies. There were 2 new GASBs that were implemented in FY24 that really had no impact on the authority. GASB 99, which related to omnibus, and some tweaks to financial reporting didn't really change anything. And then also GASB 100, which if you ever had a correction or error discovered, you would have to follow those standards and how to report that. But since those didn't impact the financials at all for VPRA. Throughout the audit, no disagreements, with great cooperation. We weren't aware of any consultant views or other accountants. We weren't aware of significant issues discussed with management. There were none that we identified. No, as I stated before, no difficulties encountered in performing the audit. And then certain written communication between management and PB mayors. There's a copy of the arrangement letter and representation letter included in our report that we issued for your reference as well. Auditor's judgment about the quality of accounting principles. Management, they do a great job of diving into the GAAP pronouncements and things that in the overall GAAP accounting to determine what appropriate levels are required for those, and do a lot of research. And throughout the course of the audit, when something would arise, Steve's staff, Bonnie, they would contact us and, hey, what do you think about this? So it's great to have that level of communication with them because it allows them to kind of work through things before they actually implement it. We were not made aware of any fraud or illegal activities. Independence, we're not aware of any relationship that would impair our independence. And then there was a management letter issued. The letter really only related to upcoming GASB pronouncements that could impact VPRA that management is currently evaluating and will determine how those could impact the financial reporting moving forward. We were, as part of the audit, our IT team came in and did a deep dive into the ERP system that was implemented this year. There was a separate letter issued from that team that had some recommendations. I think a majority of those recommendations that could be implemented have been implemented, and they're kind of weighing the cost benefit on some of the other type of recommendations we had. But the new ERP system, we brought a team in that specializes in looking at your controls around the system and everything. And so there is a separate letter that Stephen could share, but that's part of the audit work that we did. And then at the end, I just want to thank VPRA's finance team and their upfront effort, truck work to be prepared for the audit. It's a lot that goes into it. They get pushed behind a ball a little bit with some reports coming out late for VRS and some OPEB reporting that they were able to get that information and then still make it in time for the APA's deadline of September 30th. So just congratulations to Steve and his team there. So
I want to add that I also think your team, I wanted y'all to come on site. You did it. You wanted to come on site. So we got to know each other some. Y'all were very professional through. Y'all met the other side of that September 30th deadline. Y'all stepped up to the plate. It's a really big deal for us to make that deadline this year, the first time. Definitely appreciate it.
with that, take any questions if anyone had any questions. If you're able to review the financials ahead of time or have questions for us.
My apologies, I'm new. I have not had a chance to review these, but I don't even know if this is applicable or not to the VPRA. With the investment valuations, any AOIC, any CI issues from a valuation standpoint?
Not that I'm aware of, sir.
Okay.
So, and in the financial statements, there's a pretty good footnote that discusses the investments, how they're rated, the level of rating and things of that nature. If you when you get into reading them. So,
Great, thank you.
Yes, sir.
Curious why this first year the deadline compared to previous years. So prior year, I mean, as Dwight mentioned, there's always every year just getting some information from VRS pension plan, which pushes for whatever reason it's August, almost the end of August date. So that's part of the problem that we've had. The other part was, last year, so this audit, the prior audit, we were in the middle of the process, put in a new ERP system. So we were literally up against it, putting in a new system that we turned on July 19th. And if you put in a new system, you can do all the planning you want, but it never quite goes as perfect as you want. The ledger system, you got to pay payroll and you got to be able to pay bills or it stacks up on you real quick. So that was that. And the prior year for that, first year was literally, we're using QuickBooks for, hate to say it's way, but putting it together on a shoestring, so to speak, approach. And we just didn't get, I'll just say this, we didn't get the cooperation from the prior auditor. Bonnie was here today. She's unfortunately out sick. I think she'd say this too, that Shannon said it too, that, we kind of had managed that process versus them giving us tight deadlines. So a lot of different things.
That's also to that. We don't know why the VRS and OPEB stuff comes out so late because it's a year behind. It's actually based on 23 information, not 24. So like Steve said, I think it came out the third week of August. So then they have to go through and do all their adjustments. And then it also impacts their indirect cost allocation, which is a pretty large task to take on at that point to get all those adjustments. So nothing to their fault. I think if VRS issued their reports earlier, we could probably be done mid-September, but we're at the mercy of them with that. So that's every entity across the Commonwealth. So
Thank you, Mr. Fitter, for getting them all the information they need on time. And thank you to your team for your cooperation and your independence.
well, we appreciate the opportunity and look forward to next year. We'll start talking about it soon, Steve. Sounds good. Sounds good. Thank you all.
Thank you.
Thank you.
Thank you. You appreciate it. You're welcome to stay if you want.
We're gonna move right to agenda item 13. Ms. Height is sick. Mr. Fuller is gonna present from VPRA financial statements.
Yes. So first, Bonnie, our director of accounting, was going to present today. She unfortunately got flu type one day too. So I'll step in for her. I would say I know Bonnie would echo everything that I see about the auditors and the audit. And I was thinking her, Shannon, the whole team, they did great work to get that done. And it really, to make that September 30th deadline, we're very proud of it. It's a big accomplishment. So thanks to my team. So with that, I just want to spend a few minutes, not very much time, but just going through some basic information about the financials. Outside of Darian and Madam Chair, I'm not sure I've sent you all the link off of our website, but I will. It's good bedtime reading, but if you look at the financials, by all means, ask questions. If not, these are just going to be a few of the highlights. As we just said, this was our first full year. The audit was first full year of our new ERP system. And what is most interesting about that is it did require a little bit of work. We got to July, the year finished. Well, we had never done a year-end close in this ledger system. So a few hiccups, a few bumps that had to be traversed there, but we were able to get through it. As you all recall, and I said thank you again, I'll say it again, thanks all for having faith in us going out and getting the new auditor, working with Auditor of Public Accounts to procure that team. I think it worked out really well. And as Dwight mentioned, they actually did an in-depth review of our IT systems, which I thought was an added bonus, added value. So unmodified opinion, September 30th, we talked about last point here, GFOA certification. So next year, there's the Government Finance Officers Association. I think, Rich, your VRE gets this certification if I'm.
That is correct.
So we're going to, and the auditors worked this year to kind of line things up. So next year we will push to do that little bit of extra work, some more supplementary information that has to be added to what we're doing today. We're going to push to work to try to get that certification next year. So just a few numbers to throw out at you. The first on here on the left, assets line in that position. You see our current assets have continued to grow. That's primarily we continue to collect a lot of funds. But I'm talking net position. I'll start from the top. But net position has grown because currently we are collecting a lot of revenue and we're putting a lot of that money into our capital projects, which are assets. So we're not actually expending those funds until we finish building those capital projects, 6, 8 years from now, 5 years, then we'll start depreciating and there'll be more expense. So that net position is going to continue to grow for this entity and get quite large. That top green line will continue to go up. Current assets continue to go up this year as we've done a good job collecting our different revenue sources. As we mentioned earlier, we did send $315 million out for the Manassas line transaction, so we should see a decline there in the coming year. And then current liabilities, they have decreased the first 2 years because what we had there was we had the installment payments under the original CSX purchase agreement. So we had those last 2 installments and the current liabilities each year. That has been paid off, and now you're going to start to see a trend with current liabilities over time that's going to start increasing as our capital projects program starts kicking in. So that $68 million is going to be a bigger number next year as we have a lot more construction activity underway. The other chart, quick ratio. So really, first thing I'll say here is quick ratio, well, it's a measure of liquidity, the ability of your current assets to be liquidated without a loss to be able to pay your current liabilities. A quick ratio above 1 is great. So when you see the decline, I don't want anybody to think it's a bad thing. We're doing great and we're still doing great. So, and what you're going to see here is that is going to decrease over time as we get those projects going and we spend the balance of funding that we have. I know we've done really well. Shannon's team done really well with our investments and making a return, but we're not in the business of investing and getting a return. We just happen to be fortunate we've collected a lot of funds up front. Next 2 charts. So this first chart here on the left is what I call our cost recovery ratio. DJ spoke about that earlier. And you saw the sort of 8-year trend. And there's 2 lines here. If you look at our financials, the blue line is if you took our financial statements and utilized them to calculate this cost recovery. And the difference being is with the orange line, in those 2 years post-pandemic, there was coronavirus relief credits that were given to Amtrak. And Amtrak took those funds and they applied them to the expenses before they sent the bill to us. So it was all recorded on their books and their financials. We thought it appropriate to, for a comparability point, to show the impact if we had not received those credits and what the full cost of the Amtrak operations would be. And that's what the orange line is. And you see the last of the credits were applied in FY23. So there's a slight difference. In FY24, there are no more of these credits. So going forward, the two should match. And last thing point there, 72%, and I almost said this earlier, but 72% is a great cost recovery for a public transit entity. It's, a lot of, I worked for years over DRPT, a lot of public transit bus operations are below 20% now. So this is it's an important metric. DJ early on said we need to adopt this metric. We have, and I think all our team supports it, and we're hopeful to remain around that 70% of our long-term goal. So last item is change in net position. Dwight spoke about this a little bit. Really, this is the change, the annual revenues versus expenses. There's going to be ups and downs here, but it should remain positive until we get to that time when we complete the projects, and then we start having a large depreciation expense for those projects. So you're going to see a lot of volatility here because it really is the revenues compared to the expense. And what happened this past year is we just had a year where we didn't quite get as much revenue. We had front-loaded certain revenues, and then this year, some of those revenues, like Amtrak, for instance, we had front-loaded revenue, and they had a provision they weren't going to keep advancing. We're allocating using those funds. And so in the current year, Amtrak didn't send us this money. We had used up the money they'd given us. So that will move up and down until we get to 2030s, and then you'll start seeing potentially a decrease in that position because we're depreciating all those assets we have. And finally, the last point I wanted to make today is on the statement of revenues, expenses, change in the net position. I call it the income statement, profit and loss. These are the revenues, and just wanted to give you a feel for the sources. So our dedicated Commonwealth Rail Fund, $158 million, investment revenues of $37 million. I always like to point that out. Our team's done a great job with it, and it helps for our projects. That's what that money goes towards, to help pay for our projects. Then we have a couple of sources of funding, one from our funding partners, which is a little bit of VRE money of their dedicated fund. And then other Commonwealth of Virginia funds, like there's a lot of different funding sources that come through VDOT there. And then last is our operating revenues of $84 million. So anyway, that just gives you a high level of the financials. I didn't want to go into a whole lot of detail beyond that, but if any questions, please feel free at any time to reach out.
Thank you.
Thanks. Thank you. Thank you.
Okay. We'll move to agenda item number 14. Mary is ready to give us a budget look ahead.
All right. Good afternoon. Like I was introduced, I'm Shannon Perry. I'm a senior director in the finance team, and I was asked to come and give a financial plan overview and talk about our annual budget cycle, as there are some new faces. So this is rather high level. We're happy to dive into any details, but we're going to try and knock this out in about 15 minutes here. So please stop me if you have any questions as we go through. So starting out, we're going to talk about the financial plan, the annual budget, and I am going to also talk about the management reserve at the end of this presentation, but we're going to jump into the financial planning objectives. So in the FP&A field, we talk about the financial plan as sources and uses. So a little bit about terminology. All of the sources compiled the revenue. So it's the FRA grants, it's the contributions, it's dedicated revenue that come into the plan to pay for all the uses. And you're probably very familiar with our uses. It's our large scale capital projects, our operations, and Amtrak trains, and then also the grants that we give to other entities, as well as the management reserve that we hold as like our VPRA wide contingency. In a perfect world, this balances, right? So as you can see here, we have this visualization of the scale. So we have $7.7 billion of sources, and then that funds $7.7 billion of uses. Seems easy enough, just wire them up, and then here we go. The issue is that VPRA has a really complicated financial landscape. We have over 42 different sources in our plan, and then we have to use those to pay for 75 unique uses. To add to the layer of complexity is on the sources side, many of these have designated uses. So an FRA grant, for example, that has to go to a specific project, and many times a specific component of a project. Also, you have things such as our funding partners where they've said you can use our funding on specific projects. So we're constantly monitoring that within the plan. Another issue, another consideration with the sources is that the estimates change. So we have some big pieces of our financial plan that we continue to work to refine the estimates. We have 2 debt financings that we're actively working to get better information on tolls and revenues to solidify that the balance that we're carrying in our plan is accurate. There's also the timing of cash flows. Each of our sources have different funding landscapes, meaning some may be reimbursement basis, some are on a defined schedule, some just come every year, depending on the estimates that we get from taxation. So there's a lot we're considering on the sources side. Similarly, on the uses side, you guys have heard this many times, capital projects fluctuate as they go through the project lifecycle. You get more information, things are changing, so we're constantly monitoring that. Same with our operations, we're reforecasting, figuring out where it's gonna go in the future to run our Amtrak trains. So this is kind of the big picture of what we're continuing within the financial plan. We did provide an example. This is very small, but I'll get you kind of the, I know, I apologize. It's a lot to get on one slide. So down the left-hand side here, these are our core capital projects. And then a couple grants as well. Across the top are the various sources. It's been rolled up to a level that's more aggregated just because it wouldn't fit on even this slide if we went any lower. What you can see, and I'm hoping you guys can see this in this slide, there are different shades of colors on the boxes. So if you have a gray cell on a project, that is an ineligible funding source. You cannot put them there. If it's a white box, that's eligible. So if we were trying to move something around, we could possibly come in and move the funding to that project. One thing that this does not contemplate and is more detailed in our model is the timing. So this truly is giving you a mapping of overall what the project is, what sources are paying for the project. But there is more detail that goes on to map up the timing in the model. As you can expect, there's changes constantly. So this is an iterative process. We are doing financial planning consistently throughout the year. However, one time a year, we have to come in and draw a line in the sand to produce the budget and say, at this point in time, this is where we stand. This is what we can fund within our plan. So every year, we like to bring to the board the full picture, right? We want to be transparent on what we have in the plan. So we're going to come and we're going to show you, here's what our sources were last time we spoke to you. Here's what they are today, and here's what's changed. And we'll do that for all of the components of our financial plan. So in detail, so this is what we brought in August. This should look familiar to some of you. We'll come through and tell you what changed in that $88 million of sources, similarly with uses, and then the resulting management reserve that we'll recommend as a result of this. Last note on this, the timing for a financial planning window has always been pinned to the last capital project to deliver service. So as you can see here, the timing goes through FY31. We will continue that for a few years, and then at some point we will pivot as we start to become more of an operations and maintenance entity. But as our core focus is capital projects, this will remain our timeline that we'll continue to monitor for comparability purposes. So we're going to continue down this path and talk about the annual budget cycle. So what drives our annual budget cycle is that in our enabling code, we have to deliver a capital budget to the CTB by February 1st. That kicks off our entire process. What actually has to go to the CTB is the capital portion of VPRA's budget and a 1-year operating plan. But the CTB only approves the capital side. So last year, we kind of took a step back and thought about this. The hardest thing about producing a budget 8 months out is your 1-year operating plan. There are so many things that you need to know closer to the start of that fiscal year that really inform a good budget. What we've done is we've said, okay, we'll prepare the capital pieces of this budget, get it to the CTB in accordance with our requirements. We still have to do an estimate of our operations costs because it feeds into the financial plan. We still have to have that information, but we won't send that all to the CTB. We're going to come back and that'll be included in just the VPRA budget. So how this works from a timing perspective, I think is key here. So Right now, we're in the November and December timeframe where we're really aggregating changes to the sources and the uses, and we'll do our big budget prioritization process. What that will result in is a capital budget that we'll brief the finance committee on in January. We'll turn around and ask for the board, you all, to recommend the capital budget, go to the CTB to meet that February 1st deadline. BG will go and present it to the CTB, and we'll come back in March and ask for their approval. So that will kind of round out that requirement that we have with the Commonwealth Transportation Board. Continuing on, so then we come back to the VPRA board, the full VPRA budget. So then we'll continue to refine our operations budget. We'll go ahead and we'll meld that in with the larger capital budget. And in May, we'll distribute that to the board, hold a finance committee meeting, and generally we offer one-on-ones if there's any questions. And then in May, we'll ask that you adopt the budget. The critical piece here is to say that there's significant changes in the capital budget as we move in that May timeframe. We'll go back to the CTB and make sure that we're still complying with the rules and regulations in the code. That was a lot of information, a very quick overview of our financial planning and our annual budget cycle. Can I answer any questions before we push on to the main answer? Very helpful. Thank you. Okay. So we are here to review the FY25 Q1 management report. What I'm going to do is simply I want to forward this to the board to talk about what's changed in the management reserve and we ask for your approval of the current balance. So as you can see here from the end of fiscal year 24, we are recommending an increase of $30 million. What this really relates to is closing out our operations for FY24. So we brought in a little bit more Amtrak revenue than we had budgeted. The costs were significantly lower due to the new PREA 209 methodology. So we are able to increase this management reserve, bring it to $158 million at the end of Q1. Typically, at this point, we like to just hold this balance because, as you just heard, we're going through a larger budget prioritization process. So when we come back in January, we'll likely recommend that management reserve be set at a different threshold. But this is what we have right now as of Q1. So I'm happy to answer any questions before we ask the board to approve the management reserve balance. Yes.
Can you talk about this methodology, right? Because it sounds like this is I don't mean this, but it sounds like it's like that. Right? The idea is like that. Yeah. Like this is how we accounted for this based upon some kind of obviously the methodology. Can you walk through what that actually means, what the changes is?
Absolutely. So we're talking about the changes to this specific.
Yeah. So like, how we got this how we got this new 30. We got to this $30 million number because it sounds like it's not.
Absolutely.
It's not actual money, but it's.
Yeah, exactly. So what happened is in the financial plan, right, we had allocated a certain amount of dollars to pay for the operations. Similarly, we had assumed there was a certain level of revenue to come in the plan. So what we've done is we've replaced those two amounts. Now we have actuals, and that freed up $30 million because we didn't send that out the door to Amtrak, and Amtrak actually gave us more money. So that's where that $30 million is coming from. Exactly. It is more like it's a math exercise. Yeah. How do you understand their questions? Yeah.
I would entertain a motion to approve the quarterly management reserve. I move to. Ms. Dorsey. Further discussion. Ms. Cole, Ms. Boucher.
Approve.
Mr. Crawford.
Approve.
Mr. DeLandro.
Approve.
Ms. Dorsch. Mr. Knight.
Aye.
Mr. Jordan.
Aye.
Mr. Payne.
Aye.
Mr. Watkins. Thank you. We are going to backtrack now to what we missed for lunch and go back to agenda item number 8. Is Mr. Austin available? So bring this on Span meeting.
Well, we're bringing up the presentation. I could spend all day talking procurement and business development and SWAM. I have all day. Procurement and VPRA is an open door. Our procurement rules are posted on the website. We're open for business. We need people interested in doing business with us. We were talking in the first half about wanting a fair market value on items we procure. We're not hiding anything. We put our rules out there. We want people to understand us. We want to understand them. So hopefully they will bid on our projects. It has been happening. We've had great world-class interest in everything we're doing. But I'll just say, I'm going to go through this quick today, but I have an open door policy with y'all, with industry, with SWAMs, with everybody. So if I go too quick and you ever want to call me or my team, Our numbers are all over the website. We are the only VPRA employees that post our numbers and emails. So we are open. I did just want to take a few minutes today to discuss our procurement rules and how we work to ensure a level playing field in everything we do. Because we do want businesses of all sizes to have the opportunity to contract with us. In addition, per the last board meeting, we are also seeking approval of VPRA's fiscal year 25 supplier diversity goals. Per the Code of Virginia, we are exempt from the Public Procurement Act, but we had to adopt our own rules governing VPRA procurement procedures. We cannot, it's not the Wild West. We had to set the rules. We're following similar to federal guidelines. The only exception to us not having to follow the Public Procurement Act is for procurement of professional services. Any cost on a professional services procurement expected to exceed $80,000, those procurements need to be consistent with the Virginia Public Procurement Act, specifically provisions 4302.2, 4303.1, and 4303.2. If you're not familiar with them, it's some of the bench contracting limits and just professional services contracts. And then in May of 2022, we had the board meeting and the board adopted our procurement rules. Like I said at the beginning, these are publicly posted, provided the industry as a way to show that we are open for business, how we operate, and hopefully they will be interested in doing business with us. The rules helped us establish a framework and general policies under which we procure goods, services, and construction from private contractors. We want competition and fairness in all of our transactions. And in everything we do as well, the team supports it, I support it, the board supports it. We are looking to maximize small and diverse usage in every transaction that we have. I wanted to provide a quick overview on just supplier diversity and some of the different categories. There's so many, whether it's SBSD, whether it's DBE, and there's so many acronyms within it. I get confused, we all get confused. I was just at a supplier diversity business development the other day. SBSD even stumbled across some of the acronyms. So there's just so many of them out there. Well, we just want to repeat again, we do promote SWAMs and diverse businesses in everything that we do. It's our policy that small and diverse businesses certified by SBSD or certified by the DBE program have an equal opportunity to participate in our procurements. To help do this on micro and small purchases, just in my travels where a lot of the small and diverse businesses live, we provide extreme consideration to use SWAMs and DBEs whenever practical. And then on the large competitive procurements, in accordance with our procurement rules, firms must submit a small and diverse participation plan, and these plans are part of the evaluation process. And those plans will become part of a contract if we award one off of it, and we require firms to report their usage during the project, and we can and will address any deficiencies as they arise. To help us maximize the usage of small and diverse businesses, plans can always be amended upwards for more usage for small and diverse businesses. We allow liberal amendments to plans if it possesses the opportunity to improve their small and diverse business participation. Quick overview just on some of the differences. We show it in every board meeting, but just wanted to get a little bit deeper in case, because there's so many different acronyms, I want to provide some numbers. SBSD, Virginia Department of Small Business and Supplier Diversity, and that's the acronym we use a lot, SBSD SWAM. Certifications include small businesses, 51% independently owned and controlled by one or more U.S. citizens or legal residents, and has 250 or fewer full-time equivalent employees, or average gross receipts of 10 million or less. A woman-owned business, at least 51% owned by one or more women. Minority-owned businesses, at least 51% owned by one or more minority individuals. And in micro businesses, is a small business under the SWAM program, but it has no more than 25 employees and no more than 3 million in average annual revenue. The Commonwealth with the SBSD program and certification stays race and gender neutral. And the majority of SBSD firms roll under the small certification. As of yesterday, I ran some numbers and I'm going to round them down or up, but there were 16,000-ish SBSD certified firms. Of those, 14,000-ish were certified as a small, and another 2,000 were certified as a DBE only and not SBSD small. Now, this is where it gets confusing, and these numbers will not add up. 5,800 of those small businesses also identified themselves as a woman-owned business. So they were like women-owned, small business. Another 6,600 identified as minority-owned businesses. So they were minority-owned, small businesses. And you can have multiple variations among that. You could have a minority-owned, woman-owned small business. And then we also had 8,100 firms that were micro/small. The DBE program, federal designation under 49 CFR Part 26. The requirements of Part 26 do not apply to our projects. They apply to FHWA, FAA, and FTA projects, not FRA projects. Now, on our procurements, we seek DBE participation plans, but we do not have specific DBE contract goals. And then for the DBEs to be certified, they need to be certified by SBSD or MWA. And when evaluating, we only count DBEs certified by SBSD and MWA. Our supplier diversity goal, taking everything into account for this year, what we're projecting to spend, what we're projecting to do, new projects we're expecting to bring up, new projects, old projects that are going to be carrying on. We're seeking approval of a fiscal year 25 supplier diversity goal of 11.5% of all discretionary spend to go to small and diverse businesses. Now, this is an increase from fiscal year 24, but I want to remind everybody it is an aspirational goal. We're always looking to maximize usage, and we think by increasing the aspirational goal, it will continue to allow us to maximize it on everything we do. We're excited to increase the goal for fiscal year 25. We're excited to partner with state and local organizations to help engage and promote SWAMs across industries. We're looking to educate small and diverse businesses on doing business with us and other agencies, public and private. They might not be ready to do business with us, but we can support and educate them that maybe 2 years down the road, they'll be able to do business with us or be prepared. We also are engaging with regional teams, VDOT, counties, cities, the airport authority, private companies, business development leagues, and SBSD. And we evolve strategies to benefit SWAM programs and grow the number of available SBSD certified firms. So once again, we are recommending a supplier diversity goal of 11.5% for fiscal year. I went through it quick. Any questions, sir?
Yeah, John, thank you for the presentation. Just real quick on the diversity goal. It's small businesses and minority businesses.
It's
the combination.
It's the combination. Yes, it's SBSD certified firms. Yes, sir.
And John, also a clarification, it's 11.5. That sounds low. However, we're not under construction, right? So the 11.5 is really for the planning and stuff that we're doing. So when we said AECOM is doing the surveying, so maybe they have subcontracted that to a SWAM, right? Yeah.
They do. We count
Yeah.
second tiers
Yes,
and third
exactly.
tiers, and they do. And every month, Slade Greenway from our team is back there. She's a great, supporter of SWAM, small and diverse businesses, but she's also a great supporter of VPRA. And then she keeps up with all the crimes every month to get the reporting. And if they're falling short, we talk about how we can.
I think this gets back, DJ, to your concern at the last meeting, because I think you thought it was low, but I think when we go into construction, I'm assuming, I could be wrong, that goal will maybe go up because we have increased spending.
This presentation was great, and also talked to Jonathan. I really appreciate the time. My concern more was what is our track record over the last several years, and are we setting a goal? Are we setting ourselves up to fail?
And so that's what kind of my concern was. So I was able to talk to him and see that that is a goal that we should be able to meet easily.
It is an increase, and DJ and I talked, and just for y'all, and I did write it down. I don't remember, my memory's not this good, but we ended last year, if you recall, at 14.3% swim. So this actual goal is lower than what we achieved last year, but we did look at where we are pre-construction, planning, engineering. Typically, and I hate to make excuses, but typically less certified swim firms and some of that than in construction, and very optimistic that with our primes, other projects, should we make some hay? Am I expecting to make some hay and increase the numbers with construction? Yes, I'm very excited for that. And then as a reminder, in our first year that we recorded numbers, we had a tremendous year, but our spend was very minimal that year. In fiscal year 23, we actually had 24% of our spend was swings. So, but we're always looking to maximize it. So even though the aspirational goal, people pick up on it, maximize and would not hurt my feelings or VPRAs or anybody's to shatter that.
Yeah, that's great.
John, just one other question. I'm sorry. How does that compare to VDOT's goal?
VDOT has some impressive numbers. When we are partnering, I mentioned, we formed some regional engagement and regional teams. VDOT actually emailed me twice while we're in here. We're actually doing some partnerships to see how we can all help each other. Civil construction, I don't want to make it so simple, but Dominion's in this league, Verizon's in this league, others. There's a lot of crossovers where I mentioned that we're supporting SWAMs with other industries. I was at an event 2 months ago, young company doing great stuff for Dominion right across the street. He was like, we were next to Dominion. He was like, y'all need to introduce each other. They weren't quite ready for us yet, but I am optimistic that in a couple of years, they may be participating on some of our projects. So little stuff like that, connecting them to other players helps these business plans. And like I tell the SWAMs, it's a lot of crawl, walk, run. And sometimes on some projects, we need running SWAMs. Other ones we can take crawl. So we just work to engage the community to crawl, walk, run, and be successful.
Can you talk a little bit about the outreach that you do with SWAM companies?
Yes, sir. Whether it's an open door phone call, Slade just today scheduled 3 more meetings with SWAMs, whereas she or myself or both of us will just take time to educate them about us, learn about their business plan. But then we also just go to supplier diversity events. It seems like every Wednesday or darn near every month, there's some type of event. We spent all day out at the airport authority. Had 7, how many people were there? A couple hundred?
75.
Yeah, so 75 people and firms, diverse firms, and people from across the region were there just supporting and talking about their business, us. So it's just a lot of, here still in 2024, it's a lot of networking, shaking hands, education. In just my travels, so many SWAMs and small and diverse businesses, there's a few things they struggle with and they need a gentle push. Money is always funny. So at these events, we introduce, talk about capital. But then they're also scared to bid. They talk about they want these projects, but they're scared to actual bid. And whether it's a real or perceived roadblock, we try to educate them on how they can still be successful and get past that perceived roadblock and actually bid on some jobs.
If there's no other questions, we entertain a motion to approve our SWAM people.
Second.
Any further discussion? Ms. Boucher?
Aye.
Aye.
Mr. Drake? Aye. Alders?
Aye.
Mr. Jordan?
Aye.
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 Mr. Watkins?
Aye.
Motion carries. Thank you, Mr. Costello.
Thank you, everybody.
We'll move right into agenda item number 9, our long break brief.
So I'm going to ask Charlene and Fayed to come join me. Go pretty quick. We're going to have open session discussion. We're going to move into closed session for reasons that will become obvious as we're negotiating various pieces of contracts with the offers. Real quick, I often think Long Ridge is more of an 8-mile corridor, starting in Alexandria, going all the way up toward Union Station. Why? Because we are building a dedicated 4-track corridor in that area. That is very important. We'll be able to separate passenger trains, put them on the north or west side, while freight trains need to stay on the east side because CSX building Virginia Avenue Tunnel just south of Capitol Hill. Some folks from Capitol Hill, I think, remember that construction project. So you can see the current, actually, if this map went further this way, you can see 2 tracks from Manassas line, 3 tracks from the Fredericksburg line coming together to 3 currently. That merges the 2 over the Potomac. So you see the natural traffic jam that happens. So obviously we're moving forward with the goal to get to over 4 tracks throughout the whole corridor, throughout the larger Long Bridge corridor, if you will. And on the left side, just a kind of background, if you will. Long Bridge planning began a long time ago, led by the District Department of Transportation. We were named as the lead of design and construction in the EIS in 2020. Preliminary engineering was ongoing at that time, and we moved. The board approved the project management support contract owner's rep. Every transit agency and transportation agency in the country calls it different things. That's our owner's rep. That is WSP and RK&K. And then last December, the board approved the contract for the North Package. North Package went first because we have a lot more complicated items in DC, meaning you're building where you're currently running service, whereas the South Package, you're building a new 2-track bridge. It's currently not serviced. You're leaving the current 2-track bridge in place. So it's obviously a lot easier to build where you're not running. And we're going to show that in the upcoming slides. We did receive the $729 million grant. Thank you for your support of authorizing us to move forward with that. And DJ just sent out a note to the board a couple weeks ago that we have a preferred proposer for the South Package, which we'll talk about in closed session. So keep in mind our procurement director back there might, if some questions are asked, it might need to be asked in closed session. So, but I'm happy to answer questions. With that, I think I'm going to leave it over these 2 very capable individuals, Brian Constantine and Shirley Cleveland, who are VPRA employees and leading the effort for Long Bridge.
Thank you, Mike. I'll try to accept Mike's challenge and move briefly and efficiently through this. I'll try to give some background, if I could, for the new board members' benefit, but we will move quickly as it's a high-level brief. So let me see, hopefully we're the same. Okay, so I will be discussing the Long Bridge South Package. I'm Brian Constantine, EVP of Engineering and Construction. So good afternoon, Madam Chair. Good afternoon, board members and others. So Long Bridge South Package is still an ongoing procurement. So wanted to just reinforce that message. And it is still, a lot of things are still confidential. Today, VPRA will brief the board on the outcome of the procurement activities in this open session, of course, further into closed session. So to open the briefing, what are we building? So this slide here, a little bit busy. It's not an eye exam, so don't worry, I'll walk you through it. So the middle section there where you see numbers 1 and 2, that is the Long Bridge South package. That is what encompasses that. It's a new double track rail bridge and a pedestrian bridge paralleling the existing CSX Long Bridge. So it originates, if you start Railroad South, near that white building that you see far left, which is the Long Bridge Aquatic Center in Arlington. And it continues over the Potomac, over the George Washington Memorial Parkway, over NPS property, over the Potomac River, and then touches down on the west bank of the East Potomac Park. So that describes what we're in the process. So to recap, and again, I wouldn't expect you to read that table, but I will summarize that. VPRA issued an RFP, a request for proposals for a design build delivery of the Long Bridge South Package to 2 shortlisted firms in February of 2024. The approach involved the proposers developing a complete proposal, including alternative technical concepts. VPRA developed the design build agreement, negotiated commercial terms until we issued and then received technical proposals early in September. We've moved through that process to receive price proposals, final scope validation 5 weeks later. Our interviews and proposal evaluations were held at the end of October. Today, where we are, VPRA is giving this briefing to the board to talk further on the outcomes of the evaluations that we'll go into in closed session. VPRA intends to present the finalized design build agreement for board consideration in January 2025, and a notice to proceed to follow that. There will be a 6-month lag where scope validation will occur. The successful offer will do what is called scope validation. They will look into certain open items that continue to de-risk the project, pulling costs in, confirming like schedule assumptions and other things, at which point we'll get to mid-July, where we will have a final lump sum price offered and a notice to proceed to begin construction by July of 2025. So that generally summarizes what's there on the board. So what is the process? I'll just take a few moments for those who aren't familiar with the design build process to just talk a bit on it. So VPRA started with preliminary engineering through 30% design. Then we procured a design builder. The red line there represents where we are today. The design build approach is a collaborative approach. It increases collaboration between the owner, the designer, and the contractor. It reduces and limits VPRA's risk by risk exposure by having a lump sum price contract with limited relief events. So we have a quantifiable sum of things that we will entertain as relief events. Of course, the nature of those are still subject to execution. We'll see what happens, but we are trying to continue to de-risk the process. It allows the design and construction also, and you'll see that there in those two parallel bars that continue beyond the procure, design, build arrow. It allows design and construction to run concurrently, improving schedule performance, where construction can begin on certain elements while design continues. With that, I will hand off to Charlene to summarize the Long Ridge North package, which was brought before the board and awarded last December. Thank you.
So we're going to talk about the North package. If I had talked about the work in purple, the South package, we're going to be talking about the work in yellow, the North package. And many of you have seen this many times before. It is a progressive design build project. And the difference between design build and progressive design build is that with design build, you get a price when they are proposing a project. With progressive design build, you might want it used in a more complex environment to give the contractor an opportunity to work on the project a bit before they submit their price. You let them go from 30 to 60%, and then they submit their price. And so I'm coming to you now because that's where we are. We've received the price, the initial price from the contractor, and we're going through the negotiation period. And so we will be coming back to you in January, hopefully, if we get to a successful end of the negotiation period for the approval of phase 2. So let's remind everybody how this works again. Where we are is in the red there. So we've already gone through and procured the contract. We went through phase 1, taking the design from 30 to 60%. Have the price now, and then once we get to that, the black line will be through that phase, and then finally go to construction. So we can get more into that in the closed session. Just to let you know, that's where we stand. We can talk more about the negotiations, but also wanted to end it here on some of the work that we are doing or that's coming up probably before we see you next time. Right now, we do have sensors that we put on the existing Long Bridge. We are trying to get a baseline for how that structure is moving so that when we do go to construction, start driving piles next to that structure, we can compare the baseline to how the structure is moving once we start work. We'll also be putting sensors on the GW Parkway Bridge as well as the bridge over 395. We also plan to start tree clearing for the East Potomac Park and the area by the Washington Marina starting in January. And then we will also build crash walls at the Maryland Avenue overbuild. That will be starting in January as well. Also, we plan to do some more foundation testing, drilled foot shaft and micropiles in East Potomac Park on National Park Service property. That actually might begin in December. That'll probably be the first one to start. So with that, I think that's all we wanted to cover in open session. If you have questions, we might want to hold those until we get to close. So.
Thank you. Vice Chair, would you like for a motion to take us into closed session? Yes.
I move that the board convene in closed session pursuant to the code section 2.2-3711A29 for the discussion of the execution of the VPRA contract under negotiation, which is the same one. A design build agreement for the construction of the Long Bridge South package and a construction phase amendment to the progressive design build agreement for the construction of the Long Bridge North package. In each case involving the expenditure of public funds and discussion of the terms or scope of such contracts, where discussion in an open session would adversely affect the bargaining position or negotiating strategy of VPRA. Board member must second that motion. Okay. And then we'll call vote, Madam Chair. Ms. Boucher?
Aye.
Mr. Crawford?
Aye.
Mr. Delandro?
Aye.
Ms. Dorsch? Aye. Ms. Drake? Aye. Mr. Flowers?
Aye.
Mr. Jordan? Mr. Payne?
Aye.
Mr. Watkins?
Aye.
Motion carries.